Also lezi inhlelo lezi zizophinde futhi zibe sokhosini FM njalo ngolwesine then ungaphinde futhi ungene ku Facebook ekhasini lethu le Go Digital SA Movement noma ku YouTube Go Digital SA Foundation yethu. Nasi ke isethulo sanamhlanje we are doing accounting namhlanje bafundi. Yes, bafundi, welcome back. Today we'll be doing manufacturing. We already said before that manufacturing it's one of the part of the cost management accounting. So manufacturing is part of cost management accounting. Topic is simple bafundi that we have to get all the marks. Normally it's about 90%, 30, including the cash budget. Soon we'll be doing a cash budget, but for today we'll be focusing on the manufacturing. Let me just give you a background before maybe we start doing an activity here. You were doing financial accounting before. There's financial accounting, right? Financial accounting, it's an accounting that we are using it to communicate with the outsiders, right? So here we communicate with outsiders, other stakeholders, right? Okay, and then we have auditing, that is problem solving basically, right? And then we have income tax law. We talk about the VAT here, SARS, income tax, SARS, income tax, right? And then we have cost management accounting, right? We have now cost management accounting. So basically, cost management accounting, it's an accounting that we are using it to take decisions. So we take decisions within the departments or within the business function. How many business functions do we have? For instance, for instance, let's say you want to take a decision. So this one is for us to take decision for decision-making purpose. Decision-making purpose. Right. So we have to use this kind of accounting if we are taking decision. Let's make an example. Let's say we are Shoprite Checkers, one of these retailers. As one of these retailers, the bread that they produce and the bread that they outsource, they buy from the people who are supplying them. So make or buy system. Let's say after making a bread, after all these ingredients that go to the bread, right? We'll talk about flour, yeast, and everything. Let's say at the end of the day, the bread will cost R7.10. And then if we buy, let's say maybe the bread will cost R9.20. So it's obvious we have to take a decision here based on the price. So which decision? So it's obvious we're going to accept this one based on the price. Accept as well as reject this one based on the price. You can reject this one. But in economics, you know that in South Africa, they are saying customers are homogeneous. So they always go with the quality, despite the fact that these two commodities, they satisfy the same need. I remember when I was a student, even myself, I was not even looking at the bread like Albani and BB. I was always going for the one that we have to take and go and cut. You see, it's cheaper and it's nice, but that one is fresh only for today. But this one, the one that they outsource from these retail stores like Shoprite Checkers, can stay even 3 days or even 4 days. So in terms of quality, you see. So there's an accounting that we have to use, cost management accounting. Remember, let's say we're operating here, maybe let's say our business, Ithala. Okay, Ithala, it's our business. And then there are functions here, but we call it department at workplace. Let's say we have HR, we have marketing, we have administration, we have finance, right? We have also purchasing function, we have production, right? As well as PR, right? In order for these departments or these functions to communicate, they must use what? Cost management accounting. That's why we have to use management accounting or cost management accounting. So there we talk about manufacturing, we're talking about cash budget, we're also calculating of the break-even point and so on and so forth. Okay, let's shoot straight now to the point. Let's go now to the production cost statement. Okay, we have a production cost statement. Okay, let's go to the production cost statement. Production cost statement. Okay, let's go there on the format first. Production cost statement. Production cost statement is like one of the financial statements of the business. It's like balance sheet and the income statement if we talk about the financial accounting. So let's go on the format of the production cost statement. We have prime cost. Let me use this one now. We have prime cost, prime, or we call it direct cost. Direct cost, right? There's a figure there for the prime cost. And then here is note. So we have note number 1, note number 2, grade 12, right? Then what is note number 1? Note number 1, it's a direct raw material, right? Direct raw material. Okay, we're going to explain these terms together. And then we have direct labor, right? If you add these two, note number 1 plus note number 2 is equal to the prime cost or direct cost. You write that figure there on top, okay? And then we have note number 3 here, factory overheads. Okay, I'll come back and explain this term, factory overheads. Factory overheads. So everything here is cost. Everything here is cost, grade 12. Prime cost or direct cost, direct material cost here, direct labor cost. Also here is also cost, factory overhead cost. I'll explain it later. And then we have a figure here, right? So now if you are adding now, if you add prime cost plus factory overheads, you get what here? Total manufacturing cost. Total manufacturing cost. So in order for the product to be produced, it has to via all these 3 stages, right? Direct raw material, direct labor, factory overheads, and then total manufacturing cost. And then from here, we have work in progress, or in process. At the beginning of the year, you record the figure, right? You add now total manufacturing costs plus work in progress. Okay. And then from there, you disclose that figure. That figure does not have a name. And then now we have what? Work in progress at end of year. At the end of the year, put the figure here. You must always less at the end of the year. So the main aim of doing production cost statement, grade 12, is to get what? Cost of production of finished goods. So get what now? Cost of production of finished goods. of finished goods. So here at this stage, the product is ready for me and you to consume. So everything here, so right to go to so my telling product if Ithala. Let's go back again on this term. We're going to start with the direct raw material. Okay, what is direct raw material? And then what is direct labor, factory overheads, and total manufacturing cost. You have to understand the terminology, and then we can come and do the question later. Okay. Okay, let's go to direct raw material. Direct raw material. Raw material. Okay, cost. Remember, everything here is just cost. Direct raw material cost. Right. What is a direct raw material cost by definition? This is the material that goes straight to the production of a particular product. It's a material that is directly involved with the production. For instance, if let's say we make bread, right? So what goes to a bread, depending maybe it's white bread or brown bread. If let's say we make the white bread, it's obvious there's flour, there's yeast, there's sugar, everything, you know it, yeah? Right? But like people who are doing a hospitality, they don't call it raw material, they're calling it ingredients. Right, those are the ingredients. So here, this is basically the material that directly involved with the production, right? So material directly involved with the production. With the production. As I was making an example with bread. If, for instance, let's say we make bricks, so it's obvious one of the raw material is water, sand, cement, and everything that can go there, okay? That is, maybe let's say we want to make colors, we can put whatever thing that can change those bricks into different colors. Okay, that's basically raw material. And then we go to direct labor. Direct labor, right? For instance, if I can go back to the direct raw material or direct material, in a case of a school or any institution, the example of direct raw material can be students or learners, right? Because when you come to school, or you are not a doctor, or you are not an IT specialist, or you are not a lawyer, and therefore you have to be processed in order for you to become a finished product. And then direct labor, right? Direct labor, these are workers that are directly involved with the production, right? These are workers that are directly involved with the production process, right? Workers directly involved with the production. With the production process. Okay, with the production process. These are direct labor. So if you add these two, if you are saying direct raw material plus direct labor, then is equal to prime cost. So here, right, prime cost now. Prime cost is equal to direct raw material cost, because everything is cost, plus direct labor. So if you add these two, you get what? So-called prime cost, right? And then we have factory overheads, right? Factory overheads. Basically, factory overheads are expenses, but according to the terminology of cost management accounting, we don't say expenses. We have expenses in financial accounting. So factory overheads, cost. Factory overheads, costs, right? So here, you talk about the first thing, the indirect of the first two nodes, indirect raw material, indirect raw material. What can be the example of indirect raw material? It can be the material that can go, that is part and parcel of the production. For instance, let's say we produce bread and then packaging, right? For the plastic for cakes and breads, you can call it indirect raw material. So it's part of the factory overheads, as well as indirect labor, indirect labor. Direct labor, it can be, the example of indirect labor can be at school, for instance. It can be security or the cleaners, as well as maybe the principal if it's not teaching, because it's indirect, because it's not interacting with the learners. You see, if you interact with the learners in the case of the school, you are a direct labor. But if you just oversee or supervise, that is indirect. So it's part of factory overheads. Number two also can be consumable stores, right? We can have consumable stores. You have to be careful again when you come to these consumable stores, because you can have consumable stores at the beginning, at the end, as well as during. So you have to say beginning plus during less, at the end. Then you can get the actual amount of consumable stores, right? And then you can list any other expenses that can come from the question. For instance, if let's say we develop from here, right? Let's say we are adding here on the factory overheads, right? Say we are adding here, it can be rent expense, can be electricity, water and electricity, right? In isiZulu are saying amanzi no gas, right? Water and electricity. That's so two mates nalimhlakazi, water and electricity. Right? We have depreciation, right? Excluding what? Excluding advertising. Advertising, we know that in financial accounting is one of the expenses, but when you come to the manufacturing, it's not part and parcel of the factory overheads. I'll explain, because I'll draw something there where you're going to understand what I'm trying to say. Therefore, can list any other, okay, it can be also sundry expense. Okay, sundry expense or expenses. Okay. Depreciation. This is depreciation. Right, sundry expenses. Okay. Excluding e-marketing expense as well as e-advertising, right? Okay, now let me go to my sketch now, grade 12. Okay, let me draw this. Okay, draw these three departments here. So the question in terms of manufacturing will be always revolving among these three departments here, right? Yes. So the first department will be administration. So we have what here? Administration. So we have administration here, administration cost, everything is cost, remember? Administration costs, right? We have what now? We have manufacturing. Remember what we are doing here, basically we are doing manufacturing. We have manufacturing. Manufacturing, or we call it, it's a production. That's where everything takes place at the production process. And then at the end, we have what? Selling and distribution. We have selling and distribution cost. Okay, selling and distribution cost. Okay, or we call it another term for this one, they call it dispatch. Right, they call it dispatch. Dispatch. Right, that's selling and distribution. right? So, for instance, you may find that in one building, they've got these 3 departments. Let's say maybe downtown, in Devon or in Johannesburg, let's say in Commissioner Street, let's say number 120 Commissioner Street, Joburg, or Resik Street, or here in Devon, let's say number 20 West Street, okay? The bill of the electricity from the municipality is just say number 20 West Street, the entire building. And then only to find that in the same building, there are different departments and the businesses, right? So what is going to happen in terms of rent in that case? So the rent will be calculated in terms of the ratios, in terms of the percentages, as well as in terms of the floor space, especially in the malls. In the malls, the bigger the space you occupy, the higher the rent you pay, and also the electricity, right? So basically here, at the administration, the chairs here, 12, nice chair here. There are tables here, right? Administration. There are also even good-looking ladies here, right? Who are answering telephones and so on. Okay, I don't know whether it's a culture or what, but that's how it is, right? That is administration, right? And then when you come to manufacturing, that's where everything is done. There's a man there who's sweating there. See, that's a man here sweating there. There's conveyor belt here, right? There's a big machine here that this man is operating. And then there's a broomer here. This man is sweeping as well. You see, that is basically where everything takes place, right? At the production, at the manufacturing process. And then at the end here, there are boxes, big boxes for whatever that you are producing, selling and distribution. At the back, there are trucks who are coming to take these cars, this stock and distribute. So there are cars here at the back, right? There are cars here, grade 12, very nice car, eh? You can see my art here. Okay, there are cars here who are coming to take and distribute whatever that we've been producing. So that's why, again, if you talk about e-advertising, advertising will be always on the selling and distribution, or marketing expense will be always here, right? And then these 2 departments, we're going to see it when we are doing income statement. I'll do it just once, and then we do the activity of the production cost statement, as well as income statement in terms of the cost management accounting. Okay, let me just go back once more. On the terminology, we are saying we have the direct raw material that directly involved with the production process. Direct labor, these are workers directly involved with the production. Prime cost is a combination of the 2, right? Direct raw material plus direct labor is equal to prime cost. And then we have factory overheads. Factory overheads, basically, these are the expenses that we incurred during the time of the production, including indirect raw material, indirect labor, consumable stores, on hand, or just consumable stores. Rent expense, it can be a rent expense, water and electricity, depreciation, sundry expense, and any other expense of a factory, right? This one was just example. And then our question will always revolve among these 3 departments. Let's say we get a bill of water and electricity from the municipality. Others are saying it's municipality, others are saying it's municipality, right? So let's say we get a bill of 14,000, right? This is water and electricity, right? Of 14,000 water and electricity. Okay, the bill is 14,000 that we have to pay. Let's say here, number 1, we have to pay according to the ratio. And then number 2, it's a percentage. And then the third one, it's a floor space. It's a floor space. It's a floor space. Let's say the ratio here on the administration is 1. And then for manufacturing is 3. And then for selling and distribution is also 1. So ratio 1 is to 3 is to 1, right? And then let's say for a percentage, right? Let's say here on a manufacturing, it's 60%. It's obvious here is 20%, and also here is 20%, right? And then according to the floor space, let's say according to the floor space for manufacturing occupies 80 square centimeter or square meter. And then here, let's say 40 centimeter, even here 40 centimeter or square meter, right? Or let's say 60. Okay, let's say, yeah, 60 is fine. Okay, 60. So we have 60 square meter or centimeter, 80 for a production, and also 60 on the selling and distribution. But the figure there, then we are doing the calculations now in terms of the ratio, in terms of the floor space, in terms of the percentage, right? Okay, let's go now and do this calculation, right? Let's calculate. Okay, this one is clear. Okay, calculating now in terms of this. Okay, remember our water and electricity is 14,000. So how are we going to calculate for now for number one, for the ratio? Okay, let's go to the ratio. So we're saying 14,000 times by 3 divided by 5, right? So which means we are dividing by what? By an average, right? We are dividing by an average. You get your answer, right? You get your answer. So let's calculate it. So 14,000, right, times by 3 divided by 5. 5 is an average. You get 8,400, right? And then number 2, we're assuming that here it's a percentage, right? Still amount is still 14,000. So you times by 60, what belong to us, divide by 100%. Say now 14,000 times by 60%. You still get one and the same answer, 8,400. And then you go to number 3. Number 3, it's a floor space. Floor space, remember, I said, is the one that is popular nowadays because of the malls, right? And the shopping centers, right? The bigger the space you occupy there, the higher the rent and the higher the overheads, right? Floor space, okay? According to our example, we said our floor space would be 14,000. So we are saying here 14,000 times by 80 square centimeter or square meter divided by the total here. You can see here with 60 and 60, that is 120. So here we divide by 200, right? So we do the calculation now. 14,000, right, times by 80 divided by 200. We get 5,600. Okay, 5,000. So get 5,600. Okay, there's R here. That's our answer, grade 12, right? Okay, I'm about to go and do also the format of the income statement, then so as you can do once or simultaneously in terms of the activities. Let me take a step back once more. I said to you, grade 12, we have the question will always revolving on 3 departments, right? These are the 3 departments, right? These are the 3 departments: administration, right? Manufacturing, as well as selling and distribution, or we call it dispatch, right? That's where the question will revolve, right? In terms of what? In terms of the ratio, in terms of the percentage, or in terms of the floor space. We make our assumption that you assume that we have got 1:3:1, 20%, 60%, 20%, right? And then on the floor space, 60 square meter or centimeter and 80 centimeter and 60 centimeter. So we're assuming that we're having 14,000. We've done our calculations as you see here. So everything, you can see it is cheaper if we are using a flow space because we are paying 5,600, right? Okay, let's go now to the format of the income statement in terms of manufacturing, so that you can do the activity later. Okay, let's go on the format of the income statement together. It's similar to the one of the financial accounting, right? Income statement. Okay, income statement. Okay, let me close this. Income statement. Income statement, right? Income statement here is very short and straightforward, right? You are saying sales, or another term for the sales, we call it what? Turnover or revenue. So saying turnover or revenue. Record the figure of the sales here. Right, if we have debtors allowances, it's obviously you have to minus now debtors allowances. You know that from the income statement, debtors allowances, right? But here it's just straightforward. Let's say we're assuming that we're having only sales. Then we have cost of sales. Cost of sales. Remember, in terms of 5 letters, what are the cost of sales in terms of it's an expense, right? We always less it. We get gross profit. Gross profit. You get a gross profit. So we're saying sales less cost of sales is equal to a gross profit. And then we're having what now? Operating expenses. Right, operating expenses. Okay, operating expenses. Right, operating expenses. Here, okay, I want to take you back. Remember, we talk about the three departments, right? You are focusing now on the first department and the last department. We said the first department is what? Administration. So, okay, we're coming here now. So this one, these are the departments that we're going to pay attention. Administration as well as selling and distribution, right? There's no formula here. We can start with any of the two. We can start with selling and distribution. So we have selling and distribution, right? Selling and distribution, or we call it dispatch, as well as administration. Remember, these are all costs. These are all costs. So if these two figures, you put these figures here, put these figures here, and then you put the border, then the total of these two will come here. You put the total, the figure, then we get net profit. We get the net profit. We get all the marks, all of it. It's yours, grade 12. Let me go back once more. We are saying this is an income statement. Remember, income statement, we are doing it once a year. It's one of the financial statement here, income statement for the year ended, but don't worry about that. It will be written in your answer book. When what we have to know, it's inside the format, right? We are saying we have sales or turnover or revenue. You write the figure of the sales there. And then we have the cost of sales. You must always minus the cost of sales. You reach here at the gross profit. And then operating expenses. Basically, these are the expenses that we incur during the time of operation. So when you come to the costing, we're focusing only on two departments, as I was showing you. That we have what? Selling and distribution, or dispatch, as well as administration. And you put that one in border, and then we only write the total. So it's very important, grade 12, to know how to, to present yourself. That's how we have to write, okay? If you don't like to present like this, sometimes you may find that the answer book, there's no space for the operating expense. So which means you must, let's say maybe there was no space for this, right? There was no space for this one. We just put this one in brackets. So which means you're going to say gross profit less selling and distribution, less administration, you reach here at the net profit for the year. Okay, it depends. The answer would be the same. Okay, but sometimes the answer book can give you this option whereby you must go and disclose an operating expense, right? So now let's take a step back on a production cost statement. Remember, I gave you the format of the production cost statement, and then I'll show you, go there and calculate the per unit, and then we do an activity based on that. Okay, let's say here, this is our work that we did at the beginning, production cost statement. Sometimes here, they can say, calculate a prime cost per unit, calculate direct raw material per unit, which means each product, which means one, right? So you'll be given what? A number of units goods, a number of units produced. So whatever per unit, for instance here, let's say, as you see here, okay, as you see here, if for instance, you are given a number of units produced, let's say you are given a number of units produced, okay, number of units produced. Sometimes they cannot say produced only, they can say produced and sold. Right, let's say it's 4,100, right, 4,100 units, okay, units, right, 4,100 units. And then now we have to calculate the prime cost per unit. Any per unit, let's say prime cost per unit, you go to the figure of the prime cost, so you go for, for the figure of the prime cost. Maybe let's say here on the prime cost, our figure was, let's say we're having 10,000. Let's say here we're having 10,000. So we're going to say prime cost, okay, prime cost or direct cost, right? 10,000 of the prime cost, divide by 4,100. You get the figure, that is per unit. So let's calculate and see what is the figure there. If let's say we're using 10,000, right? So we get, so it's 10,000. So we have 10,000, 1, 2, 3, divide by 4,100. Okay, so we've got, we have, okay, divide by, okay, here, let's say we've got this figure, divide by 4,100. So we have 24,39. Okay, we're assuming here that we're having 100,000, not 10,000, 100,000, right? So you get 24,30. So which means that is 24, that is per unit. If, for instance, maybe it was the direct raw material, you also divide by per unit, right? Direct labor cost, you also divide with the number of units produced, right? And also on the fixed cost, you keep on dividing by the number of units produced, right? Even here at the end, right? Maybe let's say here at the end we have 330,000, right? So which means we're going to say 330,000 divided by 4,100. Okay, you get what? The cost of production of finished goods. Okay. Okay, now let's go to the calculation of the break-even point. Right, let's go now on the calculation of the break-even point, then we do the activity once and for all. Right, let's go on the calculation of the break-even point. I'll give you the formula. Right, let's go calculation of break-even point. Calculation of the break-even point, right? This is the formula here. Break-even point is equal to fixed cost over selling price per unit less variable cost, right? Variable cost per unit, right? That's a formula of calculating what the break-even point, right? Fixed cost over selling price per unit less variable cost per unit. Because now you are doing metric, there will be no way where we can be given a fixed cost like grade 11 as well as a variable cost. There's a formula for these two, right? It also revolves on the departments that I gave you. Remember, we did talk about the 3 departments. Let me just take you back on those 3 departments, because they are very important. If you understand those 3 departments, therefore, which means you understand the cost management accounting, right? Okay, let's come back on these 3 departments. We said we have administration, manufacturing, as well as what? Selling and distribution. Now, we need this kind of understanding also here, right? So what's the formula of the fixed cost, right? Okay, the fixed cost, okay. By the way, this thing of fixed cost just emanates from here, good people, from this graph, right? We use the graph, right? This is the fixed cost. We always take first quadrant because all signs are positive here, right? And then here we have price. We have price here or cost, right? And then these are the y-axis, these are the x-axis. We can see if it's cost FC, stands for the fixed cost. Next, this is a fixed cost, right? Fixed cost, that is FC. It is fixed, it is constant. That is the definition of the fixed cost, right? And then if variable cost, it varies, it changes. It's like an asymptote in mathematics, right? An asymptote can become closer and closer to the x-axis, but there will be no way where it can touch the x-axis. So that is the variable cost, right? That is a variable cost, right? That is a VC. So here at this point, that's where we break even here, whereby at the point of intersection, whereby if fixed costs and the variable cost as well as the price, right, they intersect. So here at this point, that's where we break even. That's where we break even here. So what does that mean? It simply means that above this point of the break even here, the business is making a profit, right? The business is making a profit here. So like, which means if we produce more than the break even point, so which means we are making a profit. In other words, the business is enjoying economies of scales, right? The business is enjoying economies of scales. The business is enjoying economies of scale. So which means above the point of break-even point here in this area here, that's where the business is enjoying economies of scales. And then below the point of the break-even point here, so which means we're making a loss, right, according to the graph. So remember, in economics or in commerce, we always enjoy. So which means here, even here, we still enjoy, but we're enjoying what? These economies of scales. So here, the business is enjoying these economies of scales. These economies of scales, right? We always enjoy, right? It's like Africans. You see, Africans, they always sing, whether they're happy or they are sad. So same thing in here in commerce. We always enjoy. We enjoy economies of scales if everything goes well, which means we're at a peak. You see, there's a profit. You also even enjoy if there's a loss, but we're enjoying what? These economies of scales. So that is basically the definition or where the break-even point emanates. And then let's go to the formula now, our own formula, according to the here. So what you have to know, it's a formula of the fixed cost, fixed cost. Okay, that is FC, right? The formula of the fixed cost, FC, for the fixed cost, right? So if you want to master this formula, let's go back on the three departments once more, right? You are saying here, it's factory overheads, costs, plus the first department. What is the first department here? According to our sketch, it's administration. So which means everything, first, right? Or F board, first ka fixed cost, or F ka overheads, as well as F ka first department. First department, right? First department. That is administration, right? Administration. Okay, that is basically the formula that you must know in Fund grade 12, right? Fixed cost is equal to factory overheads plus the first department according to our sketch here that we're doing. That is what? Administration, which means everything. It's a first department plus the factory overhead is equal to fixed cost. And then there's also the variable cost. We said a variable, which means changes. So which means if variable cost here, you can see it changes as the price of good changes. The behavior of price is very simple. The price is, it can either increase or decrease. That's the behavior of the price, right? The behavior of the price is very simple. Either it's going up or it's going down, right? In most cases, it always goes up, right? And then let's write the formula of the variable cost. Variable costs. That is VC, not Vice Chancellor, right? Our own variable cost here, right? Variable cost, also even that one, we are using the same department here, right? You are saying the prime cost. You are saying prime cost, prime or direct cost, cost plus the last department. What is the last department according to our sketch here that we did? Is selling and distribution, right? Plus selling and distribution, right? So these are formulas that you must know, Mfundi, right? These are formulas that you must always know if you want to get all the marks here in the calculation of the break-even point, as well as how to analyze the break-even point, because they can say comment on the break-even point. So we're going to need that kind of information. So remember, prime cost, it emanates from direct raw material plus direct labor, if you add that. So here, you have what now? Direct raw material. If you like, you can just say direct material. Don't even put raw. Okay, direct raw material, right? As well as direct labor. We have direct. Everything is direct. That's why it's a direct cost. Direct labor, right? So you add with what? With selling and distribution, right? That's what we must do. Then from there, the following question that can emanate after calculating of the break-even point, it can be comment whether the break-even point, are we happy with the break-even point, or are we making a profit or loss, right? Let me go to the comment, but I will make some assumptions, okay? Let's say we're calculating our Okay, let's say we're calculating our break-even point, right? Let's say we're calculating our break-even point. Remember the formula we said for break-even point, right? Break-even point is equal to fixed cost over selling price. Okay, selling price per unit less variable cost per unit. Okay, this is unit here, space, yes. Okay, break-even point is equal to fixed cost, right? Less variable, selling price per unit, fixed cost over selling price per unit, less variable cost per unit. Let's say here our answer, remember we're calculating the units. Let's say maybe we get 4,333, okay, units. Okay, I'm just making an assumption, okay, without putting any facts in. And then the number of units produced. Let's say the number of units produced, let's say we're given there on top, number of units produced. Remember, they can say produced and sold. Produced. Let's say maybe we have 1220. Let's say we have 1,220. Okay, this is a number of units. Okay, and then they are saying now comment about the break-even point. These are the results of the break-even point, and then comment now about the break-even point, right? So, and this is the number of units produced, 1,220, right? So it's obvious our break-even point is greater than the number of units produced, right? It is greater, right? We can see here we have 333 here, we've got 1220. So what will be your comment now? Okay, we must understand this. If we produce more than the break-even point, so which means we're enjoying what? Economies of scale. So which means according to this graph here, there's this graph that I was showing you. So which means we're sitting here, you see. So which means we're enjoying, the business is making profit, right? So that is the business is enjoying economies of scale. So the business is making a profit here in this case, okay? Maybe the question that you can come across, you can say, can you be happy with the break-even point? And then let's say 3 marks or 5 marks. Let's say 3 marks. We have to say yes or no. So we're saying yes. Let's say in this case, yes, right? We're saying yes. And then now we have to support. Then how do you support? We are saying number of units produced. So the break-even point here in this case, break-even point is greater. Okay, break-even point. Okay, you must write the figure. Sorry. Okay. You can say break-even point of 4,333 is greater. You must write the figures. Grade 12. Don't write as if you are writing. This is accounting at the end of the day, right? So the numbers are essentially important. Break-even point of 4,333 is greater than the number of units produced. The number of units produced, as I said, it can be produced or sold. That is 1,220, right? Remember, these are units, eh? Okay, let me read it for you. Break-even point of 4,333 units is greater than the number of units produced of 1,220. And therefore, in this case, are we making a profit or loss? Are we making a profit? Because we produce here in this case, our break-even point. The break-even point here is greater, right? It's greater. So which means we are making a loss here, right? Because the number of units produced are less. So therefore the business is making a loss. The business is making a loss. In brackets, you can say the business is enjoying these economies of scales. The business is enjoying these economies of scales. Right? You get all the marks. Let's go back once more, just to wrap up everything. We have a formula of the break-even point. You must understand the formula of the break-even point. Fixed cost over selling price per unit less variable cost per unit, and therefore you calculate whatever that you are calculating, your answer will be something units, right? I repeat, break-even point is a question that would be there in your exam grade 12. Make sure that you understand how to calculate the break-even point. We're saying it's a fixed cost less selling price per unit, fixed costs over selling price per unit less variable cost per unit, and then your answer must be per unit. But sometimes if like we are not given a fixed cost, this is how we must calculate the fixed cost. We set fixed cost plus the factory overheads, right, plus the administration cost, and therefore you're calculating your numerator. So it's obvious here on the numerator you'll be having two figures, right? And then over the selling price per unit. Sometimes you won't be given the selling price per unit, but you'll be given the sales and the number of and the price. Therefore, must divide and get per unit. Okay, and the number of units of sales. Then you get per unit, right? And then there's a variable cost. What's the formula for the variable cost? Prime cost plus selling price. Plus selling and distribution. Remember, a prime cost, it's a combination of direct raw material plus direct labor. That is note number 1 plus note number 2 is equal to prime cost, right? So we have to calculate that. Remember here, we don't need a variable cost. We need a variable cost per unit. So once you get that variable cost, you must divide by number of unit produced, right? And we made an assumption here that our break-even point is 4,333, and then the number of units produced, it's 1,220. So it's obvious here we're making a loss because the number of units produced are less. So which means we are below according to our graph where I was showing you the break-even point, right? So if maybe then they can say is it the business making a profit here? So which means we have to comment, or they can phrase the question of the comment of the break-even point in different ways. Next week, we're going to continue dealing with such kind of questions, the real activity. But I think I managed to done everything, giving the format and the terminology so that you can understand grade 12. What is it when we talk about the manufacturing? Thank you so much for an opportunity. I wish you all the best. I know it's not easy at home. You see, some of you that are still, not happy to go back to school, but please practice, and up until you get it right, it is possible, right? E-accounting, I always say that is not difficult. The only thing that it is many. There's a lot of work, you see, there's a lot of work, but it's not challenging at all, right? So next week we'll be doing the task, right? If you have, maybe we start with, the last year question paper, September, and other question papers. So make sure that you bring that question paper as well. Thank you so much. God bless you.